Life Healthcare has posted healthy full-year results. The private hospital group says revenue from continuing operations rose 6% during the period to just over 25 billion rand. Now that's as occupancy improved to nearly 70%. Well, if facilities under remediation are excluded, then occupancy was closer to 72%. But profits came under pressure. A 2.9 billion rand adjustment to the pyramidal liability linked to future sales of the group's former Life Molecular Imaging unit weighed on the bottom line. And so Life Healthcare has reported a headline loss of 93.9 cents per share. Nevertheless, a final dividend of 35 cents has been declared, which is an increase of 13% on last year's payout. Looking ahead, Life Healthcare says it will expand its asset base in 2026 by adding new acute hospital and rehabilitation beds, renal stations and specialist capacity. The firm's penciled in about 2.5 billion rand to carry out these improvements. Reinet says its net asset value stood at 6.7 billion euros at the end of September. This marks a 3.7% decline from March. The decrease reflects changes in the fair value of certain investments, currency movements, and dividend payments. Now, the company has declared a dividend of 37 per share and says it continues to focus on long-term capital growth. Reinet notes that while global markets remain uncertain, it maintains diversified cash reserves and robust risk management to safeguard its portfolio. Tsogo Sun has halved its interim dividend. That's even as the group's earnings edged higher in the first 6 months of its 2025 financial year. The company says it's taken the decision to conserve cash as a way to strengthen its balance sheet, and so shareholders will receive 15 cents per share. The market welcomed the update with Tsogo Sun shares rising in early trade, though the stock remains sharply lower for the full year. Cal has rewarded shareholders with a dividend hike after reporting a stronger financial performance for the year ended September. The retail and agricultural group has posted a 10.6% rise in headline earnings per share, while earnings before interest, tax, depreciation and amortization grew 7.5%. Net cash from operating activities climbed 10%, boosted by strong trading. However, revenue fell 6.6%, largely due to deflationary impact of fuel. The company has declared a total dividend of 2.10 rand. Carl says the results mark a recovery from last year's weaker performance amid challenging trading conditions. Cell C's gone public. The mobile network operator debuted on the JSE. It's now trading as an independent entity after years under Blue Label Telecom's ownership. Cell C's shares were priced at 26.50 rand, giving the company a market cap of about 9 billion rand. The listing forms part of Blue Label's broader restructuring of Cell C, aimed at improving its access to equity markets and boosting liquidity for shareholders. And Growthpoint has reported a solid start to its new financial year. During its first quarter, the owner of Four Ways Crossing says the South African portfolio performed well. That's as vacancies fell to their lowest level since 2019, with retail, office and logistics assets all showing stronger tenant retention. Moving forward, the firm has highlighted ongoing interest rate and currency uncertainty as key risks, but expects distributable income to grow 3 to 5% and dividends by 6 to 8% for the year.